Hello and welcome back to Car Rental University. I am your host, Alex Withrow. Today we are going to talk about what are insurance liability windows. We're going to get into how underwriters think about insurance. This is very important if you run a fleet. Before I get into that, click below, grab the 5 things you must do before starting a car rental business. That also comes with the CarShare Growth Guide, which gives you a city-by-city breakdown of which CarShare platform is strongest in your area. Lots of great information in there. And as always, give this video a like and this channel a subscribe. I very much appreciate that. Insurance is perpetually a confusing thing, I find, for most fleet operators, for most car share entrepreneurs, especially if you are newer in this space. What are liability windows in car share insurance and car rental insurance? And frankly, this applies to insurance across the board, but when underwriters are thinking about how to insure you and how to handle this type of situation, these are the periods and the windows of liability that they are thinking about specifically. So when you talk to these guys and you have an intelligent conversation with them, they are going to want to break down the periods of use of how you are using your cars in each liability window. So what is a liability window? It is a period of time and a use case of when a car is being used. Sometimes it is not being driven by a driver. Sometimes it is being driven by a driver. And sometimes driver is driving on a rideshare app. So you have multiple situations of how this is calculated and worked out. First of all, period zero, or we call that period X in this industry sometimes, as coined by ABI, American Business Insurance. What is period zero? Period zero is when your car is just sitting in a lot. And if you have an insurance policy that just covers period zero, we've seen that with Roamly's car share insurance policy. Lula used to have this with ORP. So what is covered in that scenario? In that scenario, that car is just covered when it's not moving, when it is sitting in a parking lot. If a hailstorm hits it, if a meteor falls on it, if someone breaks a handle off the door while it's sitting in the parking lot, that is all covered under period X or period zero. So that is what is covered in that liability window. It's when the car is not moving whatsoever. Now, secondly, period 1 is just the period when the car is moving and it's not on any kind of rideshare app like Uber or Lyft. So when you are talking to an insurance adjuster or an underwriter, what they're wondering is who is driving this car. Now, if the car is on GetAround, it goes straight to GetAround's insurance on period 1. If it's on Turo, it goes straight to Turo's insurance on period 1. If the car is being driven by you personally, you're going to need some form of insurance to cover period 1. Typically, people use their own personal insurance when the car is moving to cover period 1. Now, if you have just a traditional policy like Progressive or Geico or Allstate, that's going to cover when the car is sitting and also when the car is moving. So it covers period 0 and period 1. If you have a fleet captain, that is another person who is driving that car during period 1. Typically policies like period X on ABI or Roamly, they allow for someone to drive your car up to 200 to 300 miles per month just to run business related errands for the business, like taking it to the car wash, taking it to the shop, etc. So they allow for a minimal use case of driving the car around just for business errands. So that technically does cover a bit of period 1. Now, where it gets kind of tricky and a little convoluted is period 2. So period 2 is when the app for Uber or Lyft is on. So let's say you have an Uber driver who takes your car, they're driving it around, they're still on period 1, but they flip on the app. The app is now on and they are picking up someone to take on a trip. When they are in process to pick up someone to take on a trip, that is where it goes to period 2. When it is on period 2, it goes to Uber's insurance if there's an incident, or it goes to Lyft's insurance if there's an incident. So that's when it goes to period 2. So technically speaking, if your car is insured and the car goes to period 2 that is covered by Uber, your insurance company does not have to touch it. However, the reason why they always want to know if the car is being used for rideshare is because if for whatever reason Uber denies the claim, it then has to go to their company to cover the car. That is why they are typically a little worried. Now, does that happen very often? Not really. I've never seen that happen, but I know that insurance companies are clearly concerned if that happens because they know that rideshare drivers are more risky. So it's interesting because when it comes to rideshare drivers, the smaller policies with under 20 cars, they don't typically like rideshare drivers on the cars because they just want companies like Geico, Progressive, etc. They would just prefer that it's just you driving the car. They don't really want the cars used for rideshare. When rideshare drivers are on the car, they are driving them quite a bit. However, interestingly enough, with mid to large size carriers, when you have 25 or more cars on a policy, in that scenario, they actually are fine with rideshare because they have all the data on how rideshare drivers perform and drive. It's kind of an interesting paradox in the industry is that, on personal policies, they hate rideshare drivers, but on large fleet scale policies, they're completely fine with rideshare drivers. That's a common misconception in the industry. Now, where it gets a little confusing and tricky is that when the Uber app is on, but no ride has been accepted yet. So that's kind of a little bit of a gray area in terms of who handles that. Technically speaking, it's supposed to be Uber, but that's kind of sometimes where Uber gets in fights about liability, is when the Uber app is on, but no ride has been accepted yet. Once the ride is accepted and the driver is going to drive and pick up that person, that's on Uber's watch in terms of liability, but that's a period 2 scenario. And then what period 3 is that once that person has gotten into the car or multiple people have gotten into the car, that is period 3 that is covered also by Uber or Lyft, the rideshare app. That's kind of more of a cut and dry scenario. Period 3 is obviously when people are in the car, that's covered by Uber, and that is how that is dealt with. In that scenario, your personal insurance, whatever insurance you are working with, they're not going to be dealing with period 3 whatsoever. In this industry, it's period 2 that gets a little fuzzy based on that previous delineation I made before. For the most part, 95% of the time, Uber handles period 2 claims, and that is their liability window to handle. So really, when you are talking to an insurance company, you're really most concerned about period 1 and period 0. If the car is being used in a car share type scenario, you really just need the car to be covered for period 0. Once it gets picked up on Turo or Getaround, it's going on to their insurance. Try to break that down as much as possible for you to understand the 4 liability windows. When you are talking to someone in insurance, this is how they are thinking. Now, if you talk to your run-of-the-mill sales rep, Geico or Liberty Mutual or whatever, they're probably not going to know this stuff. But if you are talking to a claims adjuster or an underwriter, especially underwriting teams, they definitely know this stuff. And they are calibrating your insurance based on who is driving the car in which periods of windows. And that's basically how they are inputting that information into their algorithm to determine the risk matrix. So very important to understand how they think so that you don't get overinsured or underinsured. You want to calibrate your insurance just right. If you are looking to learn more about this, I do have a mini course that is on sale right now. It's only $55 just to give you a strong understanding of how to insure in every scenario in carshare and rideshare. Click below in the link in the description. There you'll see a link to it. But I hope that helps you. There's always a lot of insurance questions and a lot of confusion about insurance. And before I go, click below, grab the 5 things you must do before starting a car rental business. I will catch you in the next episode. Thank you.